we are familiar with buying Bitcoin, but not many of heard of owning Bitcoin miner as an investment. How did you first discover the space?
Yeah, so I used to be, I'll try to make this the short version of the story. I
Mhm.
used to be a full-time real estate investor. I had an engineering background and quite a lot of data center coursework while I was doing my undergrad. And after several years of building a real estate portfolio, I started to lose my energy for it, lose my passion for it. And at the same time, Bitcoin was coming back into the scene. Now, I had owned it for several years, but never paid too much attention to it, didn't consider it a full-time way of making an income, but saw the promise of getting into something that was still a very small share of global assets. And even now, today, it is still a very small share of global assets, less than 2.2%.
Mhm.
But I didn't want to give up cash flow, which is part of the reason that I saw real estate as my number one wealth building and wealth preserving vehicle was the cash flow that it threw off. So instead of just selling all my real estate and buying Bitcoin, I looked for the way that I could get cash flow within the Bitcoin space. And the only way to do that I found was to get into mining.
Welcome back to the Wealth Vibe Show, where we tune into the frequency of wealth creation, protection, and expansion. I'm your host, Loomba, and today we are venturing into a space that most investors never even think about when they hear the words passive income. So, what if your next income stream wasn't the real estates or stock, but it's a digital infrastructure? Today, our guest is Beau Turner, founder of Abundant Minds, and he's redefining what it means to invest in the future of finance. Beau helps high net worth individuals earn passive returns by owning Bitcoin miners without lifting a finger. It's a little known strategy that sits at the intersection of money, energy, and technology. And in today's economic landscape, it just might be one of the smartest way to diversify your wealth. Bo, welcome to the Wealth Five Show. I can't wait to unpack this with you.
Thank you so much for having me, Vinky. I'm really excited for this.
Awesome. So our topic for today is beyond real estate, how Bitcoin mining creates passive income. So, Bo, let's start with the bare basics. Most people, I think most of us, we are familiar with buying Bitcoin, but not many of heard of owning Bitcoin miner as an investment. How did you first discover the space?
Yeah, so I used to be, I'll try to make this the short version of the story. I
Mhm.
used to be a full-time real estate investor. I had an engineering background and quite a lot of data center coursework while I was doing my undergrad. And after several years of building a real estate portfolio, I started to lose my energy for it, lose my passion for it. And at the same time, Bitcoin was coming back into the scene. Now, I had owned it for several years, but never paid too much attention to it, didn't consider it a full-time way of making an income, but saw the promise of getting into something that was still a very small share of global assets. And even now, today, it is still a very small share of global assets, less than 2.2%.
Mhm.
But I didn't want to give up cash flow, which is part of the reason that I saw real estate as my number one wealth building and wealth preserving vehicle was the cash flow that it threw off. So instead of just selling all my real estate and buying Bitcoin, I looked for the way that I could get cash flow within the Bitcoin space. And the only way to do that I found was to get into mining. That is the network's native way of producing new Bitcoin. It's the only Bitcoin denominated cash flow stream that you can earn without taking undue risk, like lending out your Bitcoin for a yield, which has blown up in myriad ways over the few years that those kinds of products have been available. And so I got into mining with the idea that this would be the most similar to a real estate cash flow profile that I could get in the Bitcoin investing space. Initially had a really hard run at it with a partner that unfortunately I bought some miners, sent them to this provider, and it was a $500,000 loss for me and my wife, who then was just my brand new fiance. So that put a huge damper on our wedding planning. But I didn't lose faith in the vehicle of Bitcoin mining. I realized that it wasn't a technology problem, it wasn't a business model problem, it was just a people problem. So we started work setting up our own data center here in Oregon, and along the way decided that we would start accepting other investors to actually own miners within that data center and build a business that really we had wished had existed when we'd first started getting into Bitcoin mining. And that's how Abundant Minds was born, so we could help other people get that passive Bitcoin income with the depreciation and tax benefits that many investors come to love from owning physical assets like real estate, in a way that they didn't have to go and get a tech degree, they didn't have to become a subject matter expert, and they could participate right alongside us.
Wow. I mean, you just kind of in a nutshell gave us the whole summary, in 2 minutes. So I'm going to break it down for me and my listeners so that we completely understand the whole process, how you got there, and what was that aha moment for you. So you said you were in the real estate, and then you were a syndicator. You were what asset class you were in, like multifamily, or what exactly you were doing in real estate?
So my prime focus was on single family. I did some light commercial and multifamily, but primarily I was doing single family deals around the Dallas-Fort Worth Metroplex. And I would do any manner, from wholesaling to creative finance to subject to deals, fix and flips, anything that you can imagine. I was trying to make the most of every potential opportunity that came my way in the most creative way. And ironically, that experience was extremely useful coming into the Bitcoin mining space because having an eye for putting together creative deals, especially in an industry that's very, just barely explored, like we've just barely touched the surface of what this asset class can be. Having that relevant kind of parallel experience was very helpful in setting up some of our first deals.
So you said earlier you got a little bit bored doing the real estate and you're looking for something else. So what was that aha moment that you thought, oh, Bitcoin could be it? Or who introduced you to Bitcoin? How did that start? Tell us about that.
So my first exposure was in 2015. I started a $10 a day purchase on Coinbase. So I'm very thankful to my past self for making such a small investment that very quickly turned into something that was worth looking at.
Mhm.
But I ignored it for years. I mean, it went up, it went down, but I never considered it something that I could really sink all of my energy into, all of my time, my creativity into making something. I thought it was just something you bought and you owned and watched it go up over a few years. And at the time, I just thought of it as another investment. But what happened was in 2020, I think a lot of people's minds were opened around that period to different ways of seeing their life, different ways of seeing the world. And a guy named Michael Saylor started making the rounds on podcasts, looking at divesting his company's treasury, MicroStrategy, and investing it into Bitcoin. And at the time, this was the biggest single purchase that anybody was looking at making. And the guy's a billionaire. I had never heard of him before he started making the rounds on podcasts. But at that point, I thought, if a traditional, you know, uh, large public company CEO is starting to look at this for his treasury, maybe I should look at this again. This isn't just a speculative asset. This is something he's thinking of as a way to actually insulate himself and
Mhm.
insulate his company and actually survive far into the future. So maybe
Mhm.
I should give it another look. And that was the opening for me to really dive into the engineering, the fundamentals, the context that Bitcoin lives in the global macro environment, and realize that not only was this a potential currency that people could use, but it was likely to be, if it succeeded, the reserve asset for the world, which currently about 30% of it is real estate and about 30% of it is debt.
Mhm.
So Bitcoin at the time was, just a tiny fraction of a percentage point of all the world's assets. I thought if it could come anywhere close to 20 or 30%, then that would be a multi-hundred X from that point in time.
Wow, interesting. And then you mentioned something called Bitcoin mining, and then you said we got our own miner. you and your wife. So what exactly mining is or miner is, if I'm using the right terminology here?
Yeah, so mining is just the process that the Bitcoin network uses to turn raw energy into a finished commodity, which is Bitcoin. It's just like any other manufacturing process where you take something raw and turn it into a finished good. In this case, we're turning electricity into ordered computing power, which outputs Bitcoin. And a miner is just a computer. It's a computer with no memory, with no visual display. It's only got one really important component called a hash board. And all it does is compute Bitcoin hashes. It's a, for lack of a better term, and in a very simplified way, it's a very fast guessing machine that's guessing a random number to try and win a lottery that goes off every 10 minutes. And that lottery is what secures the Bitcoin network from attackers.
So what is involved in that? Is it like highly digital, or is there any human intervention needed, or anything that you can share with us? Once you, from your experience, once you got started, what did you do or how did you do it?
So a miner is very simply a computer. So in theory, all you have to do for a miner to work is plug it in and connect it to the network, and then it just works forever, right? And I think that going back to the real estate background, this is what many people think when they get invested in real estate is I'm just going to buy the property, I'll put a tenant in it, and then I never have to think about it again. I'll just collect checks. And what most landlords find out is no, you actually have to actively manage it. You have to make sure that things are properly upkept. You have to do tenant turnover every now and then. Things break. People do people things. Enough said. And so mining is very similar. It's on the surface a very passive activity that it absolutely can be a passive activity, but in order for it to be passive requires very diligent active management to make sure that that computer is running, that it's connected, that it's properly troubleshooted, cleaned, maintained, and if anything ever breaks, that you are addressing it as quickly as possible because if it's ever off, it's not producing income. So just like when you have a rental property that's not rented out, because your property manager didn't do their job or the market's turning. If you have a miner that's turned off or it's got a component that's broken that allows it to not connect to the network, then you are losing income. So it does require some active management to make sure that it does run. And that's a huge component of our service is just that active management of the miner.
So do you need to be tech savvy in order to run these mines or
In
mine?
order to operate them, for sure. It helps a lot if you've had some data center experience, if you've been experienced in some sort of computer repair, circuit board repair.
More like
But
a hardware person?
absolutely. But it's also much simpler than many other types of data center infrastructure. So it's got a lower entry barrier. It's also not critically important that it's on 100% of the time. I mean, 95 to 98% of the time is very acceptable, even pretty strong in the Bitcoin mining industry as far as uptime standards. If you had that standard with AWS or Azure or one of these other hyperscaler data centers, you would immediately be in violation of your service level agreement. So it's got a different set of qualities to these traditional data centers that make it really unique in terms of how you evaluate the investment, where you can set them up, the kinds of situations that you can have a Bitcoin mining facility where you couldn't have a traditional data center. It really opens up the field in a way of looking at these opportunities that most people do not have the lens to see what's in front of them.
Yeah, because it's a new phenomena. So I agree with you 100% on that. And earlier you were saying that it's not a technology problem when you started. It's a people problem. So what is people problem that you see in this? It's not having enough knowledge to kind of ride this wave. What do you mean by people
I
problem?
think the biggest problem, especially in early industries where there's not a lot of widespread knowledge, like the joke that isn't a joke that I have is Bitcoin mining is a very hard industry to pick apart with something like ChatGPT because there isn't enough context out and available to the world to really understand what's going on, like other industries that have been around for decades and decades. It really is something that you have to learn in the field from people who have been doing it.
Mhm.
And on the back of that, it means that there's a huge information advantage that people who have been in the space have over people who haven't, which means that the people who are coming in it's much easier to take advantage of them. And even though I had an engineering background, I had owned Bitcoin for several years, I was in this camp of being an easy target to take advantage of because I didn't know what went into maintaining these units the first time that I sent them to a host. I didn't know how much could be billed to me for technician time. And so the first time I got a $30,000 repair bill for essentially a college intern to go and do diagnostic work, that was a huge shock to me. But I left myself open to that because I didn't understand the industry nearly as deeply. And so I think the biggest barrier for many people is that this industry has been rife with scams. It's been rife with people who have taken advantage of people's capital. And even if they had every good intention in the world, didn't understand how to set up the business to be insulated from external circumstances like power rate increases or geopolitical changes. There's been no shortage of disaster stories. And so that scares a lot of investors away. But the important thing is when there's uncertainty, that also means that there's opportunity.
I
So
that
with the
100%.
right people, and it can be a huge upside opportunity as long as you control your risk.
That's true. But the thing is, for you, you saw the opportunity and you made the move from Dallas to Phoenix. So maybe due to save some money on electricity, on power, maybe is it like, is this one state is cheaper versus other, you think?
So we moved from Dallas Fort Worth up to Oregon. And so living in Oregon, this was not intentional actually. I was actually just moving because of quality of life. We really just wanted to be somewhere with a lot more nature, that had a climate that we would enjoy. And so it was totally an accident. It was after we moved here that I realized that this is actually the region of the country with the most abundant hydropower, with probably the most ideal climate, not a lot of competition for miners. And so we had a unique opportunity to actually be a leader up here. And some things you can plan for and they'll work out, and other things work out better than you even could have planned. And this was one of them. I've never been happier living somewhere, and our business is thriving because we live somewhere that it's really well supported.
Wow. And the other thing that you mentioned was earlier that you said we started accepting other investors who can invest alongside us. So can you give us a little bit insight into that to how you allow other investors join your bandwagon?
Yeah, so initially, the only reason that we were building a facility was to make sure that our miners were well cared for and that we could control our own experience.
Mhm.
And then as we approached finishing our first large scale facility, we realized that this was a problem that many people were facing. I mean, if you ask anybody on my team, they've pretty much across the board had some kind of bad experience with another company in our space. And so we thought it's great to be able to mine ourselves, but ultimately we solve a much bigger problem if we can help other people avoid the same issues that we had getting into this space. So we decided to start helping people get through the whole process effectively, hands off and as easy as possible. So if someone wants to come work with us, they effectively just buy a miner from us. That miner lives in our data center. It's totally maintained and operated by our team. You've got full dashboard access to see it 24/7. We do site visits about every month now so that you can actually see it in person and understand what goes into the process of making a Bitcoin. And it can be this true passive income vehicle that investors are looking for. And it's so flexible because if you own the equipment, you also get to depreciate it on your balance sheet. So I like to say it lives in our facility, but it lives on your balance sheet. So
Wow.
you've got 100% bonus depreciation in 2025. You have all of the operating expenses that come with that miner, which we do as just a flat fee for the electricity that they consume. And when you do it in that structure, it means that it's effectively like buying a small business or owning a small business that's managed for you. So you've got all of the most beneficial tax levers that people typically pull, of which, if you're in the US, the IRS typically treats business owners as the most favorable taxable entity. So that ends up being really beneficial to investors.
Wow. So share with me one example. How does that work kind of end to end? Like say if I wanted to invest with you, not me, how would I get started?
So a good example would be, say I'm, a high-tech worker, I'm making something like a seven-figure salary every year. Let's say Meta just hired me to their AI team, and I have no idea what to do with that much money, and I'm also facing a large tax bill at the end of the year. And I do want to qualify this and say I'm not a CPA or financial advisor, so none of this is financial advice. But as an example, I make $1 million this year. I am squarely in the highest tax bracket. If I want to start getting a Bitcoin position and maybe mitigate some of my taxes, I could set up an entity. I could buy miners within that entity, contribute money, part of my $1 million as startup costs. Let's say I contribute 500,000. Out of that 500,000, I'm probably going to spend 400 of it on miners and then 100 on electrical costs. Well, the 400,000 on miners is 100% depreciable with the one big beautiful bill, so that's 100% write-off. And then $100,000 in operating costs or electricity are also 100% expensed. So I just reduced my personal net income, since that business entity flows through to me personally, by $500,000, which at the 37% tax bracket, something like 170,000, a little less than 170,000 that I just stopped myself from having to give to the IRS while I'm
This
generating.
is, hold on one second. So this is against your active income, your regular ordinary income,
Correct.
the capital gain we're talking about here. Just wanted to
Correct. This is
clarify.
active ordinary income.
Mhm.
Capital gains have a slightly different strategy. They're a little bit harder to offset, but I've seen a few ways. The easiest way to integrate this is to offset either active business income or active personal income.
Mhm.
And it works beautifully. And that, especially in that first year, you have a huge write-off while you set up a passive stream of Bitcoin income that's paid out to you. So it's effectively like you're setting up a business that generates Bitcoin at a discount while you also get the chance to keep having write-offs against your taxable income.
So these are the taxes we're talking about that you got. I would call it depreciation or whatever way you wanted to term this, right? You get that much money back in your taxes, but how do you make money in Bitcoin? So take us through that journey.
So when you purchase these miners and they're operating, I likened it to a manufacturing process. So you're taking raw energy and you're turning it into this finished product called Bitcoin.
Mhm.
And one unit, you've got different types of miners, but let's just say, for an example, you've got one that's for $10,000 for round numbers. That miner is going to make about $500 in Bitcoin, so denominated in Bitcoin every month. And to operate that miner costs $225 that month. So you're effectively generating Bitcoin at a 50% discount, or you're creating a manufacturing business that's generating 50% margins on an operating basis. So that's how mining actually makes money, is that you are, because you're taking a raw input and converting it efficiently into a finished product, you're actually making an income stream from that process because you have that specialized piece of equipment that's doing it better than anything else in the world.
So you said if you invest $10,000, so you're making 500 minus operational costs, it's gonna be $225 monthly you're making on that, roughly.
That 225 would be the operating costs, so you'd be netting about 275 on that.
275 you're netting on, that's like, I think that's good money basically, right? So that's, you're getting the portion of Bitcoin by doing that, right?
Yes. And so when people do this, you can just take that Bitcoin that you're mining and sell some of it to pay for electricity. I like to tell people that it's better if you just pay for your electricity bill in dollars and hold the Bitcoin, because the opportunity cost of that $225 electric bill might be $2,200 in a few years. One of our team members, one of our engineers, has been mining since 2012, and he
Mhm.
has spent well over 100 Bitcoin on paying for electricity bills. So at the time, those were a few $1,000s. Now it's an opportunity cost of well over $10 million. So if you have another income stream that you can use to pay for that electricity and just quietly treat that Bitcoin that you're mining as a long-term savings account, that is likely to work out much better for you over the long run.
Wow, and the Bitcoin is going up every day as we speak, right? So what do you see on the horizon for Bitcoin? Because it's a limited number of Bitcoins that's gonna be available, right? So I think 70% is already done, close to 70% or so, right? So
We have actually, surprisingly, almost 95% of the supply has already been mined.
5% is mine. Okay.
The
So
last
hold on.
Bitcoin gets mined in the year 2140,
Got
so
it.
over 100 years from now. But the last four out of those 5% will be in the next 10 years. So it's a diminishing return curve in terms of how much Bitcoin is getting mined. And so the next 10 years are really, really crucial. This is like the digital gold rush is the next 10 years for miners. And then after that, you'll spend 100 years trying to make a fifth of what is currently available.
So what do you think about the other currencies out there, like Ethereum and there's multiple other like USD or USDs or like US coin or what they call it? They are coming into picture too. These are all the digital currencies too. So what is the impact is going to be on the Bitcoin? So do you see any competition there or anything that's gonna bring the Bitcoin craze a little bit down?
So I used to own quite a few of these other coins. And even early on, I made quite a bit of money in these other alternative coins. And in 2021, I sold every one of them for Bitcoin. So I only own Bitcoin now. We only mine Bitcoin. We only advise people to get into Bitcoin. And the reason is not because I don't think that there's any value to anything else, but I think that Bitcoin is the only one to solve the total addressable market of money. So these other currencies, these other coins, these other projects, they have a design that makes them in many ways useful for other business applications or record keeping applications or even financial applications, but they don't solve the critical issue of a censorship resistant, non sovereign, open source monetary protocol. They all have some detriment that makes them not suitable for that purpose. And so I believe that Bitcoin is going after the largest market, and I think that is far and away the most well suited to do that. And because it's already so far in the lead, it's the fifth largest asset in the world over companies like Google and Microsoft. It's very unlikely for anything else to catch up with it now that it's already created broad adoption. It's kind of like I like to say, it's like if you said, well, should I sell my Google in case Netscape is the next search engine? Probably not. Probably does not make sense to take away from the most dominant network and try and diversify into one that may have a shot at gaining some ground, but more than likely has just been left behind. So, in my opinion, Bitcoin is on its way to become the base level financial infrastructure and the reserve asset of the world's accounting system. And right now, that's a mix between US treasuries and sovereign debt and real estate are kind of those bedrock assets that people use as the method of storing wealth over long periods of time. But I think Bitcoin is just technically superior and it's gained very, very fast traction to a very large scale over a short period because of those technical superiorities that I think are just becoming more and more obvious to the market as time goes on. But it's still only 0.2% of global assets. So even if it's only going to 20, that's still 100x from here. And so I don't think that'll happen over the course of a year, probably not even over 10 years. I think this is a multi-decade transition that we are still in the very early innings of.
That's true. I think people are not embracing it 100%, not everybody, because they're still like used to traditional fiat currency model. It's very hard to accept this digital currency because they do not know which way it's gonna go. Because it's like something you're getting in the thin air. So it's not something tangible that you can touch or feel, right? It's there, but you do not know. And the security, I think, is much better now, but I'm not sure the hackers are always way ahead in the game as well. So I'm not sure if they can still, steal your Bitcoin, or can it be canceled if somebody stole it, and can they put it back in your wallet? How does that work? Can you tell us a little bit about that too?
Yeah, there's two ways to take this. One is the network itself. So the Bitcoin network is by far the most secure computing network in the world, just by the raw amount of computing power being thrown at it. So when I describe the mining process, that is literally like uh, gigawatts of energy everywhere in the world being thrown up as a wall of encryption that someone has to match in order to violate the rules of the network. So
Mhm.
it's a gargantuan task, and there's not really any incentive to do it unless you are financially motivated. And if you are financially motivated and you have that much power, it actually makes more sense to just participate honestly and just become a miner yourself.
Mhm.
So that's at the network level. And I mean, this would be a long conversation in itself. In my opinion, it is beyond the point of any single event being able to kill it. You would have to turn off the internet simultaneously everywhere in the world and keep it off forever in order for Bitcoin to not come back. It's essentially the most anti-fragile network that's ever existed. But your other question is a good one, is what about people stealing your Bitcoin or hacking your Bitcoin? Now, like anything, like if you have, say, a password to your bank account, that is vulnerable to you as a person, as an attack surface and social engineering and all of that. But in terms of actual network security, Bitcoin wallets are secured by something called SHA-256. That's secure hashing algorithm, and it's 256-bit encryption. This is a protocol that was brought in by the NSA decades ago and is a standard for protecting very sensitive data.
Mhm.
And just to give you an idea, Satoshi, the inventor of Bitcoin, who nobody's heard from in over a decade, has about $100 billion worth of Bitcoin sitting across a few wallets that if someone had broken SHA-256 encryption or found a way to, quote, hack Bitcoin or hack someone's Bitcoin, that is about the most lucrative bug bounty that you could ever have out for somebody to try and solve. So there's literally $100 billion and more every year because the value of that Bitcoin keeps going up that is sitting there as a bounty for anybody who decides to figure out how to hack that. So if someone were financially motivated and they had the ability, I think that that would have been stolen by now. So your coins are probably safe.
Okay, thanks for sharing that. So let me ask you this question now. A lot of listeners are used to the traditional investments like real estate, maybe in participating in the syndications or the stock market. So how does Bitcoin mining fit alongside those strategies in a diversified wealth plan?
So I think this is twofold. The Bitcoin itself is definitely an asset appreciation strategy, but when you do it in the context of mining, it also fits the bill of an income strategy. And I've seen people do it with anywhere from 1 to 5% of their net worth to I've seen even retirees decide to do, 30 to 50% of their net worth in something like Bitcoin mining because they have that conviction in Bitcoin as the most standout asset that they could possibly own in their portfolio. But what I believe is, everybody has to make their own portfolio sizing decision, not just based on the asset, but based on your understanding. The worst thing that you can have is a great investment that you don't understand and that you're afraid of. Even if it's the perfect allocation, if you don't understand why you're doing it, you're likely to sell it at the worst time. You're likely to sell it when you should be buying more. And so I think that building understanding is one of the most important things that you can do with this. And it's helpful not just to that position, but also to everything else that you own. So I like Bitcoin mining specifically because it's not just about Bitcoin. It's not just about these computers. You actually get a lens into energy. You get a lens into the reinvention of a financial system. You get to see how this intersects with data centers going from 1 or 2% of the world's energy to 10% in a very short period of time. And even if it's only a very small portion of your portfolio, this gives you so much insight into how the rest of the world works. And honestly, is one of my greatest joys and one of the ways that this has paid me back the most is not just the return that I've made in mining and owning Bitcoin, but the return in understanding the world around me and being able to see 5, 10, 50 years into the future because this vehicle unlocked an understanding of some of the most core systems for how our world operates. And I think that over the long run, for any investor, the greatest investment you can make is in yourself, your own ability to navigate the investing world. And this is one of those keystone pieces that if you spend a few hours a week, let's say, it will continue to give back and give you more of a lens into what the future will look like and how to position yourself.
Wow, that's interesting. So you set up the data center. So you wanted to talk about that too a little bit, how you have set up the data center, the Bitcoin data center. So that's a real estate piece right there, right? So would you call it will fall under the data center asset class with a class within real estate?
Yeah, the joke is, I sold all of my real estate to get into Bitcoin and Bitcoin mining, but in a way, all I did was change the type of real estate that I was looking at because now we have several data centers across Oregon.
Mhm.
And these are unique in the sense that they're not very similar to what you would typically see like a Meta or a Google or Amazon build in terms of a data center, but it
Mhm.
has all the same components. So this is a type of data center property, but it's got unique characteristics. You don't necessarily need redundant power. You don't need huge amounts of fiber. In fact, you can run a Bitcoin mining facility off of something like a Starlink or a cell phone connection.
Oh.
It's a very low bandwidth
Mhm.
data use. And so that means it can go into many places that other data centers can't. So the analogy that I like to use is we as Bitcoin miners building Bitcoin mining data centers are like people that are prospecting pieces of land to build a campsite that maybe in the future it's a beautiful campsite right now on the coast, but someone's going to want to come and build a Four Seasons a few years down the line. And that's going to require total redevelopment, but we secured that foundation layer asset of what needs to be there. And that really is the real estate strategy within this is the knowledge that data centers are the fastest growing asset class within real estate and increasingly becoming very hard to source the right kind of data center property. If we can get into those properties before anybody else in a way that nobody else can make use of them until those resources come, then we are getting in on the ground floor of something that most people are not looking around the corner to see. So, in that sense, we are in the data center industry. We are building data centers, but with a very different lens than someone who's building for high performance computing or AI.
So these are not the high performing centers like big buildings or big lot of cables and it's like a lot of computers, a lot of computing power. Because you just mentioned, right, you can run this in a very lower bandwidth. So, but how do you mint then, because it's like, don't you need like power and then the strong network? Otherwise, how you're able to compete with the other miners in the industry who are mining for the same thing or solving the same puzzle? If I understand my days when I started in Bitcoin, I never mined though, but I learned a little bit about it. So isn't like you do some puzzle solving or something, and whatever gets the first algorithm in place, that person wins. So isn't there something like that? So it's like you're competing with so many people. So it's like the faster person wins or something like that.
You identified it perfectly. It's not how much data I can move, it's how fast.
Fast.
So something like Starlink or even a cell phone connection, as long as the latency is really low, that time from, signal to receipt is very fast. It doesn't matter that the amount of data I can move. I don't need a fiber connection where I can move hundreds of megabytes or gigabytes in a single data packet. All I need is for that very small data packet to get communicated and propagated really quickly. So that opens us up to so many locations that other data centers would not go. And you actually see these two worlds merging a little bit. You see Bitcoin miners, especially the large public companies, starting to develop for more traditional data centers. And you see larger data centers actually looking to build Bitcoin mining facilities into their existing data centers because there is this very unique energy consumption pattern that actually helps them be a benefit to their grids and stabilize their energy use, whereas these more traditional computing loads can't do that. And there's this merging of the two industries where you mentioned like huge buildings and racks of servers. And I mean, these are gargantuan real estate developments, like absolutely huge. They are starting to look more like and become more like what Bitcoin miners have been like for years, where you often see these in what look like shipping containers. Bitcoin miners will set up these modular facilities anywhere and everywhere that there's access to energy. And the data center industry has taken notice, and you've started to see that they are building more and more modular facilities just like that. But it took years. Um, it took the opportunity of more and more stranded sources of energy in places where you couldn't necessarily get all of that infrastructure set up to
Mhm.
start changing their form factor. So these are two worlds that intersect and collide and have so much to do with each other and yet still are so very different, but they're very closely interrelated.
Hmm. Interesting. So I think many people still doubt crypto, digital currency altogether, like I was saying earlier, because this is not something like the fiat currency that they're used to. So I wanted to ask you this question. What do investors usually misunderstand about Bitcoin mining? And then what do they overlook? When talking about that, how people are not that much interested, I would say not embracing that digital currency as they've been looking at fiat or other like precious metals, maybe. So Bitcoin is something still kind of far-fetched. Not for you guys, but I would say for average people, I would say. And then Bitcoin is like the price is going so up every day. So it's getting kind of harder and harder for people to get into their reach, basically. So, what are your comments on that?
Yeah, well, one thing I'll say is you don't have to buy a whole Bitcoin. You can buy still, few cents
Yeah.
worth of Bitcoin and just slowly add to it. So that's one thing that I think goes very commonly misunderstood is that you can just buy it in very small increments.
Mhm.
You actually said this earlier, and I think it's still the biggest barrier for most people
Mhm.
who are used to having something physical. This is very common in real estate investors, where you have this sense of certainty that it's a physical asset that you can drive to and put your hands on whenever you want. It's not going to evaporate into thin air. It's not ones and zeros on a computer screen. And what I think the unlock is for people is to recognize this is why we do site tours that Bitcoin isn't just ones and zeros on a computer screen. It's facilities like ours all over the world that are using real resources, real energy to create a commodity that, although you can't see it, is very much backed by something real in the physical world. And going off of that, one of the bigger misunderstandings that is totally reasonable because most people don't understand our energy systems. It's one of the most complex systems that humanity's ever devised is how we deliver energy to each other. But people get really hung up on the fact that Bitcoin uses a lot of energy. And my take is that that is a really good thing. And in fact, the more energy that it is backed by, the more true of a commodity, the more true of an asset it is. And in fact, that energy use in many cases is just mitigating waste. So, what most people don't understand, especially if you only listen to a few different sources for news, is we think that there's not enough energy in the world, that there really isn't enough, and that people need to stop using so much of it. But the reality is that human civilization progresses not by us using less energy, but using more energy over time. And in fact, we have an overproduction of energy. California alone uses or wastes more energy than the bottom 30 energy poor countries in the world. And the third largest block of energy in the world after the US's energy use and China's energy use is the wasted energy from the US. So there's this huge amount of waste in the most fundamental system that runs our world. And Bitcoin miners are going after that waste because waste is the most cheap, easily monetizable type of energy there is. The kind of stuff that nobody else wants and nobody else can make use of, we are actually going and paying for, and in many cases, actually mitigating pollutants. So, flare gas at oil wells, methane at landfills, these underutilized resources. People will stand up solar farms and wind farms and then only use a tiny fraction of what they produce because the grid gets oversupplied. And if you can integrate miners into all of these different contexts, you just make better use of what's already there and actually inject efficiency back into, again, the most core system that we all depend on as humans. So, in a weird roundabout way, this thing that people are scared of taking all the energy in the world is actually making our energy system more healthy and giving us the ability to develop more. and continue stair stepping up to the type of civilization that I believe is inevitable and, in fact, is unlocked by something like Bitcoin.
Oh my God, we need to do another show on that. Just full-fledged show. I think we need more time for that. Seriously. So on this show, we talk about wealth as the uh, as more than money, I would say, more like energy, more like alignment or expansion. So how does Bitcoin mining, in your view, align with that bigger definition of wealth?
Yeah, I absolutely love this question because on the back of everything that I just said, this is an impact vehicle that most people are afraid of because they think that it's doing something bad to our environment, to communities. And the reality is, when you place these facilities in the right way and you operate them in the right way, it is truly one of the most capital efficient impact vehicles to bring opportunity to places that otherwise have none. um, just having an impact on a rural community's energy use can not only bring financing, a tax base, all of this economic activity that they depend on to grow back to places that, at least in the Northwest, have had many industries leave. It also brings local high tech jobs that, in many cases, you can't get in rural communities. If you can optimize energy procurement for a local community, you can actually lower the cost of living for everybody there. And one of my favorites is these data centers, all data centers, but especially mining data centers, exhaust a lot of heat. And in the winter, heat is a commodity in the Northwest. And so we're using that across a couple of data centers to actually pipe into greenhouses and grow fresh food through the winter that then gets donated to food banks. So, in a weird roundabout way, you deciding to mine Bitcoin, even with a single machine, could end up helping a family get fed, which is not anything that I ever thought that I would be able to say on any sort of podcast, but has become reality. And it's just this clever, creative way that we can take what's already there and make the best use of it and give some of it back and revitalize an entire system. So for anybody who's looking at building wealth, I think this is a great vehicle. And if you think that building wealth is also having an impact on people, then this is a great vehicle for you as well.
Wow, having impact is the must thing when you're trying to create this wealth building strategies for yourself. And seems like this is one of it, you know. Oh my God, I'm glad to know that. So let me ask you this. If someone is listening today and is curious but intimidated, and what is the first step they should take to explore this type of investment?
Well, the easiest way to learn more, I would say, we've got a website. It's abundantminds.com. We've got a YouTube channel as well that is, if you just search Abundant Minds, you'll find us on all of the socials. It'll be at Abundant Minds. Specifically on our YouTube channel, we've got a ton of long form video content, short form video content. I've done podcasts with many people in the Bitcoin space. And so that is a very rich source of getting more information because it's very hard to cover something this deep in just under an hour. So that's where I would direct people to learn more. And of course, if you go to our website and book a call with one of our client advisors, this is not a high pressure sales pitch kind of thing. We love educating people. It's one of my core values is to make sure that people are not just empowered to make money, but also understand more about the world around them. So education is something that we're very forward with.
I really like that. I believe in education too, because we provide the tools or the education or the knowledge and let people decide whatever they wanted to do, right? So that's what the channel is for anyways. So this brings us to our rapid fire round. I know we are over time a little bit, but I have tons of questions. So I'm going to ask you 5 questions. It's going to be very short questions. We're going to go really fast. You have to answer it in one word or one sentence only.
Oof.
Ready?
Okay,
All right.
I'm ready.
So Bitcoin or real estate,
Bitcoin.
the book you would give to every investor,
Buy back your time.
the biggest myth about crypto,
It uses too much energy.
morning routine, structure or spontaneous,
Mm, Tune into what you need that day.
wealth in one word means
Giving.
I like that. I was thinking impact. That's a really good answer. Thank you so much, Bo. It's such a eye-opening episode. You have shown us that sometimes the smartest opportunities are the ones hiding in plain sight if we are willing to look beyond the traditional and step into the future of wealth. And if somebody wants to reach out to you, how can they reach out to you?
Yeah, the easiest way to find me on either X, my handle is Beau_Turner21, or Instagram as well, Beau.Turner21. Feel free to shoot me a DM.
Thank you so much again, Bo. And everyone tuning in, remember, wealth expands when you expand your perspective. Don't overlook the opportunities that could change the trajectory of your financial future. So stay inspired, stay intentional, and keep building your wealth vibe. So see you next time. Thanks again, Bo. Really enjoyed the show with you today.
Thank you, Vinky. This was great.
Thanks for tuning in to the Wealth Vibe Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.